Question number 3 is from Chapter 7, talking about activity-based costing. What they're wanting us to do is to figure out how much of the shipping cost needs to be assigned to this particular customer. The shipping cost is the $2.4 million, and so in order to allocate the overhead, the first thing you want to do is come up with an overhead rate. To come up with the overhead rate, you're just going to take the overhead cost and divide it by the cost driver or the activity driver. And in this case, what drives the cost, or the activity that we have, the reason we have the cost is that we're shipping pounds of product. So the shipping, the pounds is going to be your cost driver. So your rate is 80 cents per kilo. So that's your overhead rate. And then to allocate it to the particular customer, you just want to multiply it by how many kilograms they were shipped. So at 80 cents times 20,000, there's your $16,000 of overhead cost. Number 5 is just asking to calculate the overhead rate. To come up with the overhead rate, it's your overhead divided by your activity level. Here, the overhead that we're looking to allocate is moving, and so that's the overhead. Then we have to use some of our common sense to figure out what would be the best activity rate, what would be the best activity level to use. Basically, your choices, you could either use direct labor hours or you could use number of moves. And since you are dealing with moving cost, the most sensible thing to use as your cost driver would be number of moves, which is 80,000. So that's going to give you a rate of $2 per move. 6, 7, and 8 we went over in class. Number 9 you want to delete. 10 we went over in class. Then for 11 it says that here's some information. We began with 1,000 units. We have 6,000 at the end. So basically we increased inventory by 5,000. Okay, so that'll be important. We increased inventory by 5,000. It gives you labor, material, variable overhead, fixed overhead, gives you some selling and admin costs. So the question says absorption costing income would be greater than, less than, in dollar amounts than variable costing. Monday in class, we discussed that to find the differences in the income, okay, so to find the difference in income with those two methods, you're simply going to take the fixed overhead cost per unit and multiply it by the units that were not sold. Okay, so we're going to multiply it by the number of units not sold. So for your fixed overhead per unit, it is $30, and then the number of units that you made but did not sell would be the increase in inventory. Okay, so the units that you made this period but did not sell would be 5,000, so it would be 150,000, and we always talked about that absorption is going to be greater than the variable. Okay, so in a period where you make more units than you sell, absorption costing is going to give you a higher income than variable. To calculate the dollar amount of that difference, you simply take the fixed overhead per unit and multiply it by the number of units that were produced that time period and not sold. Okay, so what we made and didn't sell would be your increase in inventory, so the 5,000 units. Number 12 wants to know what is your overhead rate. Remember, to come up with your overhead rate, you're just going to take estimated overhead and divide it by your estimated activity level. So it says we assign overhead based on machine hours. Okay, so at the beginning of the year, estimated overhead was 500,000. Estimated machine hours was 50,000. So that is going to give you an overhead rate of $10 per machine hour. So your answer on 12 is A. 13 we went over in class. 14 is asking for cost of goods manufactured. We're going to work this basically exactly like we worked the number 13. If you are looking at your formula sheet, you know that to find cost of goods manufactured, that's in the work in process account. So let's just jot down what's going to happen in work in process. Beginning balance plus direct materials used plus direct labor plus overhead minus cost of goods manufactured is going to give you the ending balance. We want to fill in everything that we know. So for work in process, our beginning balance was $85,000. What we add to that is direct materials used. Glance back at the problem. It says raw materials purchased, and remember, used and purchased are not the same thing. So we're going to have to go backwards and say, okay, what account did raw materials used come out of? And we know that that's coming from raw materials. Raw materials account, beginning balance, plus raw materials purchased minus direct materials used is going to equal your ending balance. So your beginning balance in raw materials is $40,000. The direct materials purchased is $150,000. So you have $190,000 of materials. Out of that $190,000 of raw materials, $62,000 is left. So that means you must have used $128,000. So the raw materials used is what's going to go over to work in process. And then you add to that your remaining product costs, which are direct labor and overhead. Cost of goods manufactured, that's what you're looking for. And your ending balance in work in process is $45,000. So you have 85 plus 128 plus 50 plus 45. So you have $308,000 in work in process. Out of the 308, 45 is still there. So that means cost of goods manufactured must be $263,000. So your answer is C. So your answer on 14 is C. 15 is just asking about raw materials. So where we're looking at raw materials, we want to look at the raw materials account. Beginning balance plus raw materials purchased minus direct materials used is going to leave you with an ending balance. Okay, so what do we know about raw materials? We know that the beginning balance is $4,000. We don't know what we purchased. That's what we're looking for. Now, direct materials used, it doesn't outright tell us. Okay, so if we glance up in here, we don't really know how many direct materials we used. So now we're really missing two pieces. So let's go on to work in process, because we know in work in process we deal with direct materials used. So in work in process, we started with an account balance of $32,000. What goes into work in process is the direct materials that are used plus labor, which is $35,000, plus overhead, which in this problem would be your factory rent and depreciation. What you subtract out of here is cost of goods manufactured, which it tells you was $88,000, and your ending balance is $17,000. So you have 32 plus 35 plus 10 plus whatever minus 88 gives you 17. So that gives you direct materials used of $28,000. Now that you know direct materials used, it can go back into the raw materials account. Ending balance in raw materials is 2. So now you can solve for purchased. So you must have purchased $26,000 of materials. So purchased materials, $26,000. So your answer here is C. Uh, 16 gives you information, gives you direct materials purchased, direct materials used, labor, manufacturing overhead, cost of goods manufactured. It says, in addition, cost of finished goods inventory increased by $10,000 from the beginning to the end. What is your cost of goods sold? Okay, so if we look at our inventory cost flow, if you look at your equations, you're going to see that cost of goods sold is in the finished goods account. So we know that in finished goods, we have a beginning balance. We add to it cost of goods manufactured, subtract from it cost of goods sold, and what we're left with is the ending balance. Now, it doesn't tell you beginning and ending, but what you know about it is that the ending inventory balance increased by $10,000 from the beginning to the end. So it doesn't really matter what number you plug in for beginning inventory, so long as you make the ending $10,000 more. So what I'm going to use is 0. So I'm going to say that the beginning balance is 0. So if I do that, all that means is that I have to make the ending balance $10,000. So my beginning balance is 0. Cost of goods manufactured is $100,000. Cost of goods sold is what we're looking for, and so I have to make the ending balance $10,000 because of this right here, because of this sentence. It increased by $10,000 from the beginning to the end. So this would make your cost of goods sold $90,000. So your answer on number 16 is C. 17 is asking, what is your product cost per unit? Anytime we're looking for cost per unit, remember it's total cost divided by number of units. So what we need to find first is total production cost. Remember, to find total production cost is direct materials plus direct labor plus manufacturing overhead. So it tells us that the direct materials used is 51,000. Direct labor is 45. And then you have to go through these other 4 items and determine if it's overhead or not. Remember, manufacturing overhead, you're looking for items that have to do with production. So I'm going to include the 18,000 of factory rent and utilities, the 7,500 of factory equipment depreciation, and that's it. The other 2 items are SG&A. So we don't need to do anything else with that. So you have 51 plus 45 plus 18 plus 7,500. So that's going to give you 121.5 as your total. And to come up with a cost per unit, you're simply going to take the total production cost and divide it by the number of units produced. Okay, so for cost per unit, production cost per unit, you have to take the total production cost divided by number of units produced. So that's going to give you $2.70. So your answer here is D. $18, you're looking for cost of goods sold. So you are going through basically the finished goods account. In order, though, to get there, you are going to want to do work in process first. And in order to finish out work in process, you're really going to have to go through all 3 accounts. So you want to start with raw materials. You have a beginning balance of 8,000. You bought 25,000. You don't know how much you used. You have an ending balance of 5. So the direct materials that you used is 28,000. That's what's going to go into work in process. So work in process, you start with a beginning balance of 30,000. You want to add to it the direct materials that were used, plus your labor cost, plus your manufacturing overhead of 30. You don't know cost of goods manufactured, that's your X. Your ending balance of work in process is 40. So that is going to give you cost of goods manufactured of 118,000. The 118,000 is what's going to go to finished goods. So in finished goods, you had a beginning balance of 7,000. You want to add to it your cost of goods manufactured of 118,000. What subtracts out of finished goods is cost of goods sold, and what you're left with is your your ending balance, which is 3,000. So that is going to give you cost of goods sold number equal to 122,000. This is an excellent question for you to go to or to work through to come up with your inventory cost flow, because you have to work through all 3 accounts.